All right, so Brian, waiting to
And
hear your voice.
yeah, I'm here. Can
Hey,
you hear
hey,
me?
Brian.
Good morning.
Very nice to meet you, Brian.
You too. Thanks for having me on.
Yeah, I went to your website and I've read about you and your book has gotten resounding reviews. Are you in your? How many editions have you gone? I believe it was published in '08.
There hasn't been different editions, but reprinting. So I
Oh,
order
okay.
them. It's a self-published book, and I order them in chunks, and then just send them into Amazon when they're getting low on inventory. It's pretty convenient how they do it these days.
Okay. Did you want to share your screen? Have you used Zoom before?
I have used, of course, I have used it before. I wasn't sure, so let me just pull up a screen here. Give me a moment, and then I will
Sure.
definitely share a screen, and we will bounce around on some charts.
Yeah, and it's a great question because talking about and like to focus on what you write about multiple time frames because I think a lot of people. I'm a big believer in using a telescope and a microscope, which is
Exactly, well
different.
put. I often
Yeah,
refer to that microscope, and now we're zooming in at 12 times power and that sort of thing. So
right.
we're right on the same page there. Let me just close a couple of these windows because they're just all over the screen and try to make it nice, clean so we can get this going. Let me see if I can get this to work properly. And
Yeah, it's a green box share screen.
share screen. And there, I think that should
Got
get
it.
right one. So you see the spy there, and then
Yeah.
okay, great.
Okay.
Um,
So
good.
before we get to the charts, even though I've read a little bit about your background, Brian, maybe you could tell us a little bit about your journey. I know you're at different brokerage houses early on, and what were you doing? Also, you bought your first stock at 13, which is the same time I did with my bar mitzvah money.
Nice.
You did it. You had to work for it. They just gave it to me for going through a religious ceremony. So yeah, you had an interest in it with your dad from before you could even drive.
Yeah, exactly. And
Yeah.
it's funny because it was a driving related stock. So yeah, I was a pretty hard worker as a kid. I would caddy, I would do newspaper routes, rake leaves, all that sort of stuff.
Like Bobby Axelrod.
Yeah, exactly. And then I used to watch the Wall Street Week with my dad,
I
just
love that
because,
show.
just to hang out with my dad on a Friday night because that's what he was doing. So I got
Yeah.
interested in the market, and then there was a company called LoJack that I had seen on the local news as I was growing up in the Northeast, Boston area, and it was known as the car theft capital of the world back then. So LoJack decided to give these trackers to the state police to help, spur sales of the LoJack device. Anyways, I said to my dad, "Hey, this sounds cool." We bought, I had 500 bucks. He said, "We'll buy 1,000 shares," and it was $5. So he gave me, buying power, another 4,500. So kind of like your bar mitzvah, I didn't really earn all the money, but he didn't give it to me either. He just basically gave me 10-to-1 leverage. I had no idea that's what it meant.
Right.
So with my $500, I controlled 1,000 shares of this $5 stock, and literally bought it at five even. And the stock within 3 months went to $10 a share. So I said, "Hey, Dad, can we sell it?" He said, "Sure." For no other reason than it doubled. Today I probably would hold it to $5.85 on partial. And
Yeah.
um,
Yeah. Yeah.
anyways, so I made $5,000 as a 13 year old.
There's I cut my teeth in the business on the CME floor, and there's a superstition. Doesn't look like it affected you, but if your first trade is a winner, that's bad luck. A lot
I
of guys on
agree,
the
it is.
merc, huh?
I see that happen to people all the time.
Yeah.
fortunately, I really didn't do much after that for a while. And
You
then
avoided the curse of the first winter, right?
I guess so. Yeah, somehow I got through luck, just through
Yeah.
luck.
Yeah.
Anyways, so after college, I was always kept interested in the market. Did some small things along the way, um, and then graduated in '91. I went on to go be a retail broker at Lehman Brothers in Boston, and realized that this is a glorified telemarketing position. This isn't
Right.
trading. It's not what I thought it was, truthfully.
Yeah.
So kind of naive on
Your
my
your your manager dropped a Coles directory on your desk and said, "Today's a good day to call names that
exactly.
start
We
with
had
B."
we had these net worth cards or something. But yeah, so
Yeah.
300 dials a day and 10 leads and
Yeah.
that whole thing. So yeah, I did that for about 2 years, moved out to Denver, and then had saved up a little bit of money. And they used to advertise in the back of the Investors Business Daily for a company called Generic Trading that said their whole pitch was basically we'll give you 20 to 1 leverage, minimum $25,000 account to open. So I scraped the money together. It was completely irresponsible to, I just my first son had just been born, and I had no other source of income. So here I go with my $25,000. I quit my brokerage uh,
Yeah.
job with insurance and steady
Right.
paycheck, and didn't really consider it as a risk. It was kind of crazy. But the great news is that I had always had a real strong appreciation for risk management, and I wasn't making big money, but I was making money every month doing that, and then
You're
decided,
grinding it out.
I was grinding it big time. I would cut my
Okay.
losers, and I wasn't making much money, but I was making money. So
You
I
know how
figured,
long it takes people to get there to know that really the best traders do grind it out, that they consider it a great year, up 30%,
yeah,
where
exactly.
the little guy is trying to turn 10 into 40 or 50 to change their life, swing for the fences and strike out. I've been that batter before.
I think we all have been there. I mean, I've tried. So I then opened a day trading office in Denver to kind of give me an extra to lower my commission cost and to give me a little extra income on the side. And then I got careless with my trading because I had another source of income. So I kind of, was swinging for the fences a little bit more, realized that wasn't working. So, back and forth, all the stuff that everyone does. And
Yeah.
so I basically then, did a stint at a company called MarketWise. I was there for a number of years, headed up their education department, ran a proprietary trading department as well, which was kind of interesting. I inherited that, and it was funny. There were, I think, 26 traders, and I was maybe 24, 25 years old, and I was given the proprietary trading department. And my boss said, "Hey, Brian, he called me. He was out of town. It was the first day that I, had this new position, and he says, 'What do you think?' I said, 'Well, and I thought I was just talking off the cuff.' He said, 'I could probably get rid of half of these guys, because I just don't see how it's going to be, how I can put all the time into all of them.' I said about half of them, I think might be able to make it, but the other half to go." So he said, "Okay, well, why don't you do that?" I go, "Do what? You know, you just fire them today." I've never fired anyone in my life. I've never been fired. I've never fired anyone. I don't know what to do.
Yeah.
So
Yeah.
I had to
Yeah.
fire 13 people all at once, which was a strange thing. And they all thanked me for it. I guess so. I guess I did a good job of it. Um, but anyway, so since then I've been trading full time, and I started Alpha Trends when MarketWise dissolved. That was 15 years ago, and just kind of started as a hobby, to continue to write each day. And the audience just built and built and built. And then Howard Lindzen from StockTwits approached me and said, "Hey, Brian, do you want to turn on a subscription product? You don't have to do anything other than do your work." I said, fantastic. Let's do it. So
Hmm.
I've been doing that for, I guess, close to 10 years, and I, trade every day as well. So that's kind of where, the whole background of that goes.
Okay. All right. Well, let's get to what you're known for, trading in using technical analysis on multiple time frames. So we're starting out here looking at the daily time frame on SPY. Um, are these VWAP lines? What kind of lines do you have here that,
Yeah,
especially the one we're approaching right here?
exactly. So
Oh, go
here
ahead.
we've got, and I was sorry if I just spoke over there a little bit,
That's
Dale.
okay.
We've got a 50-day moving average, and I like to put that on there because a lot of people look at it,
Yeah,
and
I use it.
oftentimes it's an inflection point where you get a
Yeah,
bounce. But
yeah,
a lot of people think that that's going to be the low because it bounced there. To me, they're all just people say, hey, there's support at the 50-day moving average. To me, it's a level of interest where we'll look at it's a cue to look at shorter term time frames. So, for instance, when we were there on the September 11th, when we look at September 11th, there was really no evidence of real buying and sideways activity in there. We got a bounce, but it rallied right up to the month to date volume weighted average pricing. Let's go back to the daily before I get too far ahead.
okay.
So what in 2003, I was using Realtix software, and I stumbled into the volume weighted average price. And the way the volume weighted average price worked back then was I would pick a starting point, let's say the low, and I would drag a horizontal line straight across. And what would happen was that horizontal line would adjust to the volume weighted average price. So, for instance, if I put a volume weighted average price here, what you'll see is that's where the volume weighted average price for that period of time, I actually just nailed it,
Right.
hit right here. So it would show as a horizontal line, which wasn't very convenient at all. And then I discovered I could look at it by, if I started it 10 days ago, or I could adjust the starting date to, let's say I thought that was, let's say that was at this point 87 days ago. I could do an 87-day chart, and then I would have the actual volume weighted average price from that low. So just to back it up for your audience a little bit, the volume weighted average price is simply the dollar cost average from any point forward. So from the March low, the volume weighted average price has been rising, and the average price paid for the S&P 500, the SPY, is 297 and a half ish. Well, we're well above that, so it really doesn't offer us much value at this point. It's an interesting level, but you can't trade against it. So what I have noticed is that you can start to layer these volume weighted average price levels to look for potential support areas. So once that first volume weighted average price hits, it kind of there's a battle fought there, and then the buyers regain control. So I like to call it a point of control. It's not like the VPOC volume point of control, but it is where there was a new point of control by the buyers. And then it tests here again. So that's another place where I want to add a volume weighted average price. And this is TC2000 software. They added this at my request, the volume weighted average price, that is, um, about 6 years ago. So they were kind enough to name it the anchored VWAP by Alpha Trends. So
Nice.
what this tells me here is that we're down now. We're coming here in the pre-market down to that volume weighted average price level. So that tells me here's a level of interest. It doesn't mean that I think it's going to be a low, but we've come down pretty hard. We're getting a little oversold. I hate that word, oversold, but we've also got the potential that maybe 315-ish down in here is another level because that's
What's
the
that
measure.
equality?
It's the measured move basically. We
Yeah.
take we took that high, it was
Right.
358.75. This low was 331, so that's 27 and a half points basically. That
From
gets
the
us down.
bounce. Yeah.
So you take the 27 off of
Right.
this high, gets us down to about 315. So I've got
Okay.
levels of interest below. Now, what I've been talking about and telling people, in particular, I made the point in the Nasdaq, saying that you want to play guessing games and try to buy at these volume weighted average price levels because they haven't worked, right? They're often you get a bounce, and here we're testing this one again. But what's more important is not just blindly buying into what is a perceived low, but instead to wait for the buyers to regain control. So, for instance, if we go back to some of these prior pullbacks, and let me do this, I'm just going to switch the time frame to 195 minutes, so we have twice as many candles. And I wanted to go to the Qs. So when we look at this, what we want to do is say, after these pullbacks is where we want to buy. We don't want to buy the pullback because we don't know where the pullback ends. So the way to measure where do the buyers regain control is we put a volume weighted average price from that peak. And what you see here is this is where the buyers regain control after this pullback. And then if we go and add another volume weighted average price off of this pullback peak, what do we see? This is when the average price began to rise once again, telling us that the average short from the peak was losing money. The average long who was averaging down into it was making money. So now when we look at these, you can see how well they show us. Now, it's not always going to mean that it's just going to continue higher. Of course, if you bought here, you're going to need a stop maybe below that level, and it wasn't, the right play at that time. For this peak, it held. But for this peak now, what do we see? Okay, so we can look at that. Actually, let's go to a 15-minute time frame, or this is a 30-minute time frame. So here's where the sellers, it gapped up, made that all-time high, and then we saw right here perfectly that the sellers regained control. And we knew that not at that point, but as it started to back away. So once it starts to back away from there, I draw another volume weighted average price there. That's still declining. We got above it briefly, but it was still declining. And I like to use the 5-day moving average as my benchmark. So what we're looking at now, of course, is the sellers are still in control of what I consider the intermediate term time frame. So these are 30-minute candles. And on the daily time frame, we're coming into a potential level where the buyers may regain control. So we want to then switch to shorter and shorter term time frames. I don't want to buy blindly into this because, I might have thought it was down too much here yesterday or here or here or here. But instead to, wait for the evidence to unfold that maybe we're going to see something like this over the next couple days where it does this and that 5-day moving average comes down, flattens out. So I like to, make it more anticipatory. And then I would put a volume weighted average price off of this low, if it ends up being a low, of course. And I would look for that to start, turning higher, something like that. So
I'm interested in the indicator. You had a few charts back. Most of them have had volume on the bottom, but it was not that.
I was over here and then over here.
There you go.
Oh,
what is that? What is it?
Well, here that's funny. Here's a this is so you can see down here. I've got AT share 4 time frame, and then I've got personal. I just kind of screw around with different things over here. I don't usually show that.
Okay.
So I was building a percentage ATR.
Okay.
Rather than, so this is a percent ATR rather than just a point ATR.
All right. Interesting.
So I screw around.
Busted. You're like a mad scientist, Brian.
We get stuck in the ways that we look at the market, but I think that it's important to always, have an open mind to other techniques and experiment around and say, is that adding value? And my conclusion basically is I should just do this, which was to just click that off the screen because it
Okay.
really hasn't added any value to my analysis. But it's
Okay.
important to always keep learning, which is why you guys are having me on your program and introducing some of these concepts to your audience, which I think
Yeah.
is great.
It's intelligence gathering too, Brian. I mean, you have a community. I bet there's times that people in your community point out things to you that you didn't even notice because you only have two eyes.
All the time. Yeah, I mean, nobody has all the answers, of course, and that's what a community and teamwork is all about. Is saying we've got more
Yeah.
eyeballs to find the opportunities and to question, hey, why that one here now at this point? I never get offended if someone asks me why I think a stock is a buy or a void. It's about explaining a concept, and maybe I'm looking at it incorrectly. I'm okay admitting that.
Okay. All right. So, as far as where we're at in this market, technically, what are you seeing? Do you have a long-term bias with VWAPs on maybe weekly and monthlies that this is mainly just a correction here and not the end of the bull market? Is there anything in your work that could give you that message, or is it always a constant reassessing every day and not even thinking about that?
That's a great way to phrase that question, Dale. Because again, using multiple time frames, people will say, "Hey, Brian, are you bullish or bearish?" I'm like, "Well, in the short term, I'm bearish. Look, we're going
Right.
down. There's
Yeah.
nothing bullish about this. So, of course, I'm bearish. Um, but longer term, we're still above, this rising
Everything.
20, 30, and 40-week moving average. And this looks
Yeah.
like a pullback. We're above the average price from that low, and that's still pretty far away. I think we're corrective, but the time frames that I engage on are more along these lines, the 30 and 15 minute. I try to swing trade
Okay.
and listen to the market for the what I consider the intermediate term time frame, which for a swing trade, generally, if I'm doing it right, it's, 3 to 14, 15 days. And if I'm doing it wrong, it's a day trade. I get stopped out immediately. Uh,
Okay.
that sort of thing.
All right. Well, you know what I'd like to do? I'd like to wrap it with, I've interviewed Jack Schwager a few times, and I remember I asked him this question, and I'm going to ask you the same question. I asked him, Jack, what's the most important advice you could give to a trader? And he said, find a trading style that fits your personality. What does Brian Shannon say is one of the most important things a trader can do?
Damn it, Jack Schwager. Uh,
You'll
I,
be
I
in the
really
next book, Brian.
I really have to agree with him because find your style. I always say to people, listen, here's how I'm looking at this trade, but make the idea your own. Know your time frame, know your personality, and how you interact with the market. It's very difficult for a newer trader to do that. They just want to copy trades and say, hey, well, this guy's supposed to be the expert. He said he's buying this here, and I never want people to copy my trades. I make a ton of mistakes. I get
Yeah,
stopped out of a lot of things. It's not about that. If that was what I was trying to do, I would just open up a firm and trade other people's money and not have to
yeah.
deal with
Or
fees.
have a signal service.
Yeah, exactly.
Yeah,
And instead, I all of my work, I do it through a video so I can explain. Listen, here's why we don't trust Apple yet. It's still got a declining 5-day moving average. It's
right.
still below these volume weighted average price levels. It's breaking below, and look at how beautifully that volume weighted average price off of the peak in Apple is hit, 3 times. Now we can draw one off of this peak and we got above it briefly, but we still have that declining 5-day moving average. So stay away. Don't just buy Apple because it's down too much. There's no such thing.
Yeah.
So
Well,
find your
what happens when you go to, say, a dollar store and you buy something that's cheap? It
right.
breaks. You bring it home and it breaks. So buying
Exactly.
something cheap, it can still break,
Yeah. So
right?
back to your question, I do have to, say that that would have been my answer, what Jack had said.
Okay.
Because I do it all the time. Well, let me just switch it up just a little bit though. And I will say, one of the most common mistakes that I see people make in a bullish environment is chasing a stock and looking at Apple, and you got to look at a chart and say, who's the knucklehead that buys up here? Not asking where has it come from first. To buy
Yeah.
it up there and have a 10% stop, you're most likely going to get hit because it's extended. So not chasing is one of the most important things. And now I'm starting to get some questions from people saying, "Hey Brian, should we be shorting these names? Should we be shorting AMD?" And I look at it and say, where has it come from? It just dropped 20 points. That's 18% in the last 3 weeks, and you want to short it now? No, cash is a position. You don't get involved after the big moves up or the big moves down. Get these stocks after short-term consolidations where you can control your risk.
Okay. You want me to give you a saying?
Yeah, definitely.
All right. Brian Shannon says, "Don't chase anything. Let the trades come to you, and if they don't, there'll be another."
Love it. Yeah.
Yeah, I'm giving it to you.
I
And all right.
we've all said similar types of
Yeah.
things, I think. That,
So
yeah.
yeah. So why don't you show people your website, and if they're interested in learning your methodology and how to get a hold of you, Brian. And once you go through an interview with me, something happens and it's irreversible. Do you know what it is?
Do I know what it is?
Yeah. Do you know it? Do you have any idea? You're
Uh,
now my trading warrior brother.
That's fantastic. I appreciate that, and I'm honored to be your trading brother warrior.
Yeah. So, and you have to be a warrior, don't you? I mean, if you step up to your trading platform and you hear this in your head, I hope this works. It's time to go back to the drawing board.
I love it. I love
Okay.
it.
So here's where you could find Brian
This
at
is, yeah.
alphatrends.net.
The lowest barrier way to look at what I'm doing is Twitter, and go to Twitter. Here's my stuff on Twitter. So
Okay.
I put a lot of stuff out on Twitter that is free and a lot of times actionable. I talk about these VWAP concepts and the VWAP handoff here. I was talking about the potential resistance there Tuesday night, and this was yesterday. We backed right off of that. Um, and then there was a potential support area. Put up this SunNova, which is a solar company that I got involved in yesterday. So I think that's the,
Yeah.
the lowest drag way to take a look at what I'm doing. And then if you want to go further, there's the book, which is on Amazon. I think that you click to it. I don't. I guess that's
Nice.
how you do it. I never go to my website, but there it is. Um, anyways, that's what I've got going on, Dale.
Okay, and I've heard great things about the book, and I tell you what, you're a candidate for our next trading summit, in my opinion, Brian. In fact, Joe Perry made a comment during your interview that he loves your stuff. Maybe you know Joe.
I do know
And
Joe. Yeah, I like Joe.
yeah,
He's
uh,
tell him hello.
everyone likes Joe.
Yeah,
So I really appreciate your time today, Brian. I hope that you and your loved ones remain untouched by what's floating around out there, and that you have a great fall trading season, and perhaps we could do this again down the road.
I'd love to. Yeah, anytime. Let me know. Happy to come on and keep doing the great work you guys are doing. Shoot me. You know what? I'll shoot you an email, Dale. I'll get you out a copy of that book.
Oh wow, I appreciate autographed with an 8 by 10 glossy too.
Maybe not
Of
the
you.
glossy, but
All right. All right. Well, I appreciate that, Brian. And, have a great trading day, rest of the week. And I'm really glad that our paths crossed. I'm grateful to Twitter. I've met a lot of good people like you on Twitter. So thanks again for being here today, Brian.
No doubt. Thanks again. You guys have a good day too.
All right, everyone. That's going to be a wrap. We'll see everyone tomorrow for TGIF and the beginning of the summit. Thank you, everyone, for your attention. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. Adios.